Hello guys, welcome to our channel. I'm excited to dive into today's video with you. We've got something special lined up, 6 compounding assets that will make you richer every year. In this video, we're going to unlock the secrets to building lasting wealth through smart investments. You'll discover 6 powerful compounding assets that can put more money in your pocket year after year. So stay tuned for insights that can transform your financial future. But before we get started, if you haven't already, make sure to hit that subscribe button and ring the notification bell. That way, you won't miss any of our future wealth building tips and strategies. All right, let's get started. Understanding compounding. But before we dive into the assets, let's understand the magic behind compounding. Imagine you have a little pot of gold. Compounding is like having a magical spell on that pot. Instead of taking out the gold you've earned, you leave it there, and guess what? This pot starts growing, not just from the gold you put in originally, but also from the extra gold it earns over time. It's like planting a seed in your backyard. At first, it's just a tiny sprout, but as days pass, it grows into a tree. And this tree starts bearing fruits. But here's the magic. It doesn't just give you fruits next year. It gives you even more fruits because it's bigger and stronger. Compounding works the same way. Your initial money grows, and the next time it earns even more, like a snowball rolling down a hill, getting bigger and faster as it goes. Think of compounding as your money-making little money babies. Those babies grow up and make even more little money. It's like a never-ending cycle of financial growth, and the best part, you don't have to be a financial genius to make it work. It's about being patient and letting your money do the heavy lifting. Let me explain in simple terms. You know how your favorite pizza place has those loyalty cards. The more pizzas you buy, the more stamps you get, and one day you get a free pizza. Compounding is a bit like that free pizza. The more money you invest, the more it multiplies, giving you a bonus, your own financial free pizza. Now, compounding assets can be anything. Stocks, real estate, or even that little savings account you have. It's not about having millions to start. It's about starting wherever you are, even if it's just a few dollars. It's like planting a tiny seed over time. With the magic of compounding, that tiny seed can grow into a big, sturdy tree of wealth. So in a nutshell, compounding assets is like having a money tree that keeps growing and giving you more and more fruits without you having to plant new seeds. It's the ultimate secret to growing your wealth, and it's right at your fingertips. So plant your financial seeds wisely and watch them blossom into a forest of financial freedom. That's the power of compounding assets. It's not just growing money. It's growing your dreams $1 at a time. Asset 1, stock market investments. All right, let's move to the first of the compounding assets that will make you richer every year. Stock market investments. Imagine the stock market as a colossal marketplace where you can buy a slice of your favorite companies. It's like owning a piece of Apple, Google, or any other company you admire. When you buy a stock, you're essentially buying a tiny share of ownership in that company. It's like owning a mini part of a big pie. As the company grows and makes profits, the value of your share goes up. Companies like Amazon and Tesla started small, but look at where they are now. That's the power of the stock market. But here's the thing. The stock market can be a bit like a roller coaster. Prices can go up and down. That's why it's essential to think long-term. Picture it like planting a tree. In the beginning, it might seem like nothing much is happening, but as time goes by, it grows stronger and taller. Stocks work in a similar way. Over the years, they tend to grow, especially if you choose solid companies with strong foundation. Now let's talk about risk. Yes, the stock market can be a bit unpredictable, but historically, it has shown a steady upward trend. It's like a wave. It might have ups and downs, but the overall direction is forward. That's why experts often say don't put all your eggs in one basket. Diversification is key. Spread your investments across different companies and sectors like tech, healthcare, or energy. By doing so, you're reducing the risk because even if one sector has a tough time, others might be thriving. Remember, investing in stocks isn't a get-rich-quick scheme. It's about patience and resilience. The most successful investors, like Warren Buffett, didn't make their fortunes overnight. They patiently rode out the ups and downs, and over time, Their investments blossomed into significant wealth. So there you have it, stock market investments, your ticket to owning a piece of the world's biggest companies. Remember, do your research, diversify, and think long term. Now, let's move to the next compounding asset that will make you richer every year. Real estate investments. Picture this: you buy a house, an apartment, or a piece of land. It's not just a place to call home. It's also an investment that can significantly contribute to your wealth. When you invest in real estate, you're essentially becoming a part of a market where the demand for shelter is a fundamental human need. As populations grow, so does the demand for housing and commercial spaces. This ever-increasing demand often translates to an increase in property values over time. One of the beautiful things about real estate is leverage. Now, what's leverage? It's like using a small force to move something massive. In real estate, you can use a mortgage to buy a property. You put down a fraction of the property's price, and the rest is financed by the mortgage. As the property appreciates in value, your return on investment is calculated not just on the money you put in, but on the property's total value. It's like having your money work on a grand scale. Now, let's talk about passive income. Another sweet aspect of real estate. If you buy a property and rent it out, you're not only benefiting from the property's potential appreciation over time, but also from the rental income. It's like having a tree that not only grows, but also bears fruit every month. And as time goes by, the rent tends to increase, giving you more fruit from the same tree. And it's a big but, real estate also requires careful management. You need to deal with tenants, property maintenance, and market fluctuations. However, many successful investors have built substantial wealth through strategic real estate investments. So if you're thinking long-term and are ready to manage the responsibilities, real estate can be a powerful compounding asset in your wealth-building journey. Asset 3, mutual funds and ETFs. Now, let's talk about compounding asset number 3. Mutual funds and exchange-traded funds, ETFs. These are like the superhero team of the investment world. Instead of picking individual stocks, you're investing in a diversified portfolio managed by professionals. It's like having an expert gardener take care of your money tree. Mutual funds pool money from many investors to buy a diversified portfolio of stocks, bonds, or other securities. This diversification helps spread the risk, reducing the impact of poor-performing assets. ETFs work similarly but are traded on the stock market like individual stocks. Both mutual funds and ETFs provide a level of diversification that can be difficult to achieve as an individual investor. Here's the compounding magic. As the assets within the fund grow, the value of your shares grows too, plus many funds distribute dividends, which means you get a share of the profits. It's like having a team of experts manage your money, and all you have to do is hold on for the ride. Now, let's talk about risk. While mutual funds and ETFs are generally considered less risky than individual stocks because of their diversified nature, there's still some risk involved. Markets can go up and down, and past performance doesn't guarantee future results. It's important to do your research and choose funds that align with your financial goals and risk tolerance. So if you want the benefits of investing without the hassle of picking individual stocks, mutual funds and ETFs might be your ticket to compounding wealth. It's like having a financial superhero team working for you in the background. Let's move on to compounding asset number 4, dividend stocks. Now, stocks are great, but dividend stocks add an extra layer of sweetness to the deal. When you invest in dividend stocks, you not only benefit from potential stock price appreciation, but also from regular cash payments called dividends. It's like getting a paycheck from your investments. Here's how it works. Companies that pay dividends share a portion of their profits with their shareholders. So as a shareholder, you receive a steady stream of income. And here's the compounding magic. Instead of cashing out your dividends, you reinvest them to buy more shares. It's like planting seeds with every paycheck and watching your investment garden flourish. Many successful investors love dividend stocks for the consistent income they provide, especially during market downturns. Even if the stock price isn't skyrocketing, you're still receiving those dividend checks. And as you reinvest those dividends, your investment grows even more. Now, keep in mind that not all stocks pay dividends, and those that do may change their dividend policies. It's important to do your research and choose dividend stocks that align with your investment goals. But if you're looking for a steady income stream and the power of compounding, dividend stocks might be the asset for you. Let's talk about compounding asset number 5E, bonds. Now, if stocks are the thrill seekers of the investment world, bonds are the calm and steady companions. When you invest in bonds, you're essentially lending money to a government or a corporation in exchange for regular interest payments and the return of the principal amount when the bond matures. Here's where the compounding magic happens. You receive interest payments, and what can you do with those payments? You guessed it, reinvest them. It's like getting paid regularly for letting someone borrow your money and then using that money to make even more money. Bonds are often considered less risky than stocks because they provide a predictable income stream and the return of the principal amount at maturity. They're like the tortoises in the investment race, slow and steady, but with a consistent stride. However, it's important to note that not all bonds are created equal. Government bonds might be considered safer than corporate bonds, but they also tend to offer lower interest rates. It's a trade-off between risk and return. So if you're looking for stability and a reliable income source, bonds can be a valuable component of your compounding asset portfolio. Now, let's talk about a relatively new player in the financial landscape: cryptocurrencies. Compounding asset number 6, digital currencies like Bitcoin, Ethereum, and the multitude of altcoins out there. Cryptocurrencies operate on a decentralized technology called blockchain, and they've been making headlines for their rapid price movements. It's like the Wild West of investing, exciting, but not for the faint of heart. Now, how does compounding work in the world of crypto? Similar to stocks, the value of cryptocurrencies can appreciate over time. But here's the kicker. Some cryptocurrencies also offer a feature called staking or earning interest. It's like putting your money in a savings account, but instead of a traditional bank, you're dealing with blockchain networks. Now, the crypto market is known for its volatility. Prices can swing dramatically in a short period. That's why it's crucial to do your research and only invest what you can afford to lose. Cryptocurrencies can be a high-risk, high-reward game, and they might not be suitable for everyone.